the first one went, we got through that well. So we'll begin. Item 1, apologies for absence.
Councillor Evans, Chair.
Right, fine. Next one's appointment of substitutes. We haven't any.
No, none, Chair.
Thank you. Do we have any declarations of interest under the Members' Code of Conduct? None coming through. So we need to confirm and sign the minutes of the meeting held on the 29th of July and the meeting held on the 12th of August as a correct record. Do we all agree with that? If anybody wishes to go against, put your hand up. If not, we'll take them as read. We move on to item 5 then. External Audit Findings Report. Are you taking this, Ian?
I think Richard Percival and Terry Tobin from Grant Thornton will be taking this item.
Great, right. Welcome, both of you, to the meeting.
Thank you.
Thank you, Chair. I'm just trying to get my camera to work. There we are.
That's it.
Nearly.
Is Terry coming in as well?
Yeah, Terry's
right.
going to speak as well. Could I just mention as well, William Guest also in the meeting. He's a member of my team. He's actually led the detailed work on the audit, so he's here.
Who was that? Sorry,
William Guest. He's he's here to sort of see the finalisation of the audit. So what we're going to do, Chair, is I will speak to our audit findings report from page 4 of the pack, and I'll talk about the accounts audit. I'll then hand over to Terry, who will give you a briefing on the value for money audit. I think the first thing to draw your attention to is where we are in terms of the audit. So the audit's what we call substantially complete, which means we're nearly done but not quite. And the not quite bit is identified on page 8, and there's 3 things really I draw your attention to: valuation of land and buildings, valuation of the pension fund net liability, and valuation of the Birmingham Airport investment. So we've asked the valuer for further information concerning the valuation of land and buildings. That information has been provided, but we're in the process of considering that information and whether it has any further implications to our audit. On the pension fund, we require assurance from the West Midlands Pension Fund auditor. As I'm sure members of the committee can appreciate, this has been an exceptional year for the pension fund auditor as well as for everyone else. So that audit is still in progress. And similarly, we require our own expert assurance over the valuation of the Birmingham Airport investment, which is clearly a hard to value investment in the authority's accounts. So I'm not able to issue my opinion until we've cleared those issues. So there will be a delay after this meeting until we're through those processes so before I issue my opinion. I'd just like to draw members' attention to the headlines really from the audit. So clearly this has been a year like no other, and we've been dealing with the COVID impact, and obviously that's had an impact in terms of how we've audited things in terms of our concerns about valuation and the general environment. But there's been a more fundamental impact in terms of the conduct of the audit, in terms of not being able to, remote working and the finance team working remotely. And I would like to report that we've had great support from the team again, from the council, as we have in previous years, but particularly under the circumstances we find ourselves in this year, we really do appreciate the support we've had. Good production of the accounts, Great support, good dialogue on the issues as we've gone through. So all that's very positive. One of the things that COVID has led us to, and without sort of getting it too far into the technicalities, is our audit opinion will include what we call an emphasis of matter, because there is an uncertainty over the valuation of land and buildings at the 31st of March because of COVID. So this is not a qualification in any way to the opinion. It merely draws attention to something that is reported in the accounts, and it's something we're doing at everywhere, and it doesn't reflect any weakness in the approach taken at Dudley or any issues with the valuation per se. It's just an outcome of where we find we are. In contrast, on the value for money side, we are proposing to issue a qualified value for money conclusion and what we call an adverse qualification, which is the most severe form of qualification. And that does relate to the situation that Dudley finds itself in terms of, particularly in terms of its financial sustainability. And as I said, I'll hand over to Terry in a moment to talk through that in a little bit more detail. So the key points from the accounts audit are our materiality level was £10.25 million, which is the level that we work to in terms of fundamental error in the accounts. That was similar to previous years. Under the auditing standards, we're required to consider going concern for the authority, and the authority's adoption of the going concern assumptions in its account. We've reviewed that. There's nothing that we would seek to challenge in that. We've also set the audit up to consider significant risks, and there's just a few things that I'd draw your attention to there. With a significant risk relating to the valuation of land and buildings. So we've challenged the valuer quite hard this year. We've had a lot of feedback from our regulator about our need to challenge valuations, so we've done that. We did identify an error in the accounting treatment for houses built for sale, and that error has been rectified, and it's not had a significant impact on the accounts. It's relatively low value. On the pension liability, as I've already said, we've no issues to date, but we've still got those issues to clear from the pension fund auditor. We've also need the authority to assess the impact of the MacLeod and Goodwin judgments, which we've alerted the finance team to, and also we need some further information from the actuary on one item in the actuary's assessment, which relates to what the actuary calls experience, and there's an £80 million adjustment in the valuation that we just need a bit of clarification on. The third significant risk I just wanted to briefly mention was COVID and the impact that's had. So I've mentioned valuation uncertainty relating to land and buildings. Clearly, it's impacted on the pension estimation as well, and means that we're doing more work on the valuation of pension fund assets, which is why it's taking a little time, and it has had an impact on the council's financial outlook and its financial sustainability, which we pick up in our VFM work. So at that point, Chair, I was going to hand over to Terry, unless any member wants to ask questions specifically on the accounts audit before we talk about value for money.
Does anybody else wish to ask questions? No hands are going up, Richard.
Okay.
I'd just like to make one sort of comment. I think basically you see the council as being financially viable until sort of mid 21-22, but then of course it could be challenging.
Yeah. I think Terry's going to pick that up now and explain a bit more about how we've come to that conclusion.
Fine, thank you.
Okay.
Yep, okay, Terry.
Okay, thank you very much, and good evening, everyone. And actually, before I dive into talking about the value for money, can I reiterate the comments that Richard said about the excellent cooperation we've had from council officers this year? It's not been an easy year, as you can imagine, and their support really has helped an awful lot. So thank you to them. Right, in terms of the headline, our overall value for money conclusion that we're proposing this year is what we call an adverse qualified opinion. So it's an adverse qualified opinion. Now, this was supported by a national consistency panel, which we attended last week. So they supported that. Now, to put that gobbledygook auditor's jargon into context, an adverse qualified conclusion is more serious. It's one step onwards from the except for value for money qualifications which we've issued in previous years. And it tends to be issued where there are either a number of highly significant issues or where one of the issues is of such significance. And the latter is the case here. Now, I'll explain the thinking behind that in a moment. But just as a reminder, in our audit plans that we took to committee earlier on, we identified two significant risks to the VFM, one on financial sustainability and one on children's services. And that's been a consistent theme for several years now. Now, if we look at children's services first, we'd picked up several concerns from the main regulator, Ofsted, in their reporting. Now, namely and particularly the special education needs review in May of last year, and also their assessment review last December. Also, in relation to special education needs, we're aware that the direct schools grant, non-schools budget balance was in deficit, and there wasn't actually a clear pathway to addressing that deficit. And given the several issues that are around in children's services, it was of a concern to note that there wasn't a substantive senior management team in place in the director. And by that, I mean that I think at the last point of looking, I think only two of the 10 most senior positions in that directorate were being substantively filled. Now, we are fully aware that action is being taken to address that one as we speak. So clearly there are several issues around in children's services, and obviously clearly they are significant issues. But despite those issues, we didn't think there was any reason to suggest that the service had fallen into an inadequate sort of zone, and therefore at this stage we are not proposing to qualify in that particular area. Now, in relation to financial sustainability, the significance of that particular area has led us to the adverse VFM conclusion. So whilst for a while up until earlier on this year, we had been seeing an improvement in financial sustainability. This is an area that we've often talked about at length in the past. The COVID pandemic has changed all that, as it has done in many other councils. So the forecasts that go into cabinet at the moment look fine for this year, for 2021, and obviously that's helped in a large part by the central government COVID funding that has been made available. But things change dramatically, or could change dramatically, in terms of the prospects for 21-22 and beyond. And indeed, if any of you have had a chance to look at the cabinet papers for Wednesday, you'll note that Ian considers there is a risk of not being able to set a sustainable budget as early as 21-22. Now, he then goes on, which is quite right to say that there are clearly some huge uncertainties at the moment, like none of us has ever seen, not least because of the where the COVID pandemic pathway is going to lead us, but also whether what support central government will be providing councils. Now, we may perhaps be a little bit wiser after the comprehensive spending review in the not too distant future, but obviously we'll have to see there. So because of that, we're going to watch this area closely, and then consider in the light of the forecasts that come from after the comprehensive spending review, whether there is any need to take any further action at this point. So for the meantime, on that area, we're particularly recommending that you draw up a plan, which I know you're in the process of doing, which would respond to that huge level of uncertainty on that side. So at least you're able to act promptly if any difficult decisions are necessary to allow yourself to move to a more sustainable financial footing. I'll pause at this moment, I think, and really just invite any questions or comments on any of that.
I've got one hand up, Councillor Casey. Okay, Sean, coming in.
Yeah, thank you, Chair. Yeah, it's just a question. I wonder if you could put a layman straight and explain exactly how the COVID pandemic has impacted the finances, where it has impacted the finances, and what we're going to try and do to mitigate if the government doesn't come up with some extra cash to keep us going. Thank you, Chair.
Brian.
Would you prefer I answer that question, or would you like Ian to answer that question?
Shall I jump in?
Might as well.
Yeah,
okay. The main areas that have been impacted are our business rates income is down. Our council tax income is down, and the reason that's down is because increased numbers of households are becoming eligible for council tax reduction. A lot of our trading income from facilities like leisure centres, are trading with schools, things like school meals. The income was significantly down, particularly during the lockdown period, and he's still operating at a reduced level even now. Once the leisure centres are able to open, social distancing measures combined with an understandable lack of public confidence in returning to those facilities that might take some time to come back. So those are the main things on the income side of the equation. On the cost side of the equation, increased costs in adult social care, increased costs of providing personal protective equipment, increased costs in ICT in order to be able to work from home. Those are the main things, the areas I went through, I think, in my presentation at the last meeting of the committee. As Terry indicated, at the moment the indication is that there will be enough grant from central government that we can cover those costs which hit in the current year, those additional expenditures that I spoke about and that loss of trading income. Where the problem arises is it's the council tax and business rates. although we're allowed to spread the impact of that when it gets accounted for in the accounts over the next 3 years, we don't know at the moment whether we'll have any additional funding to cover that. It would also, I think, given where we are now and the very deep uncertainties that we're in again today, I think it would be reasonable to assume that those impacts on council tax and business rates won't just magically come to an end on the 31st of March next year. Unfortunately, they will probably carry on. So at the moment, the big uncertainty, as Terry said, is what are we going to get out of the comprehensive spending review? How much additional funding are we going to get? We're okay for the current year, but is there going to be recognition in our funding for the ongoing effects for the next couple of years?
Right, thank you. You want to come back, Sean?
Yes, please, Chair. Just quickly, Ian, what could be the potential outcomes if there is no additional help in the comprehensive spending review? And are we hoping that there will be?
I'll answer the easy bit of that first. I'm definitely hoping that there will be. We are definitely hoping that there will be. However, while we might hope, perhaps the best way to say that is directorates have been tasked to identify options up to £10 million. Now, without going into the detail of what those might be, because that work is being done at the moment, what I would say, and it echoes what's said in the external auditor's report, is because we're already a low taxing, low spending authority, it doesn't leave a lot of room for manoeuvre in terms of what you might call easy efficiency savings. So realistically, achieving 10 million of savings would require significant cuts to quite a broad range of the services that residents receive. So of course, that is why we are hoping that there will be additional funding.
Thank you, Chair.
Jackie, you want to come in?
Yeah, thanks, Chair. I suppose it follows on to an extent, actually, and it probably Ian that needs to answer this one as well. It's really linked, it's referred to in the report on page 32, but it goes through the report, really. And it's this thing around it's vital that further income growth is achieved, and we need to be looking at making sure we get sufficient level of income tax. Sorry, not income tax, council tax, I know what I mean. But of course, we've got the problem in that we're restricted by the referendum limits, and I wondered whether we're now in a situation where it's going to be very difficult going forward to actually get that level of council tax to a sufficient level to function without crossing that that threshold where we would need a referendum. And clearly that gives us problems. I mean, do we see any way around that?
Ian, you want to answer?
At the moment, I'll answer that by saying that the forecasts I have built up assume that we will face a referendum limit next year at the same level as we have experienced it this year. We don't know for definite that will be the case. And certainly one of the things which I think the Ministry for Housing, Communities and Local Government, mustn't use the acronym. One of the things I think the ministry probably will have to consider is relaxing referendum limits, particularly perhaps relaxing them for authorities that already have a very low level of council tax. Of course, if they do that, then that will create a difficult decision locally, a difficult democratic decision to be made. But yes, we are. We have been limited by those referendum limits. I've built in an assumption of the maximum up to what the referendum limit was this year, but it might not be the same next year.
Okay, thank you.
Okay, Joe, you want to come in?
Hi, Chair. Thank you. It's really just following on from what Ian just said, and I have also got a quick question for Terry as well. We've obviously just sort of spoke about it's hard for us to cut costs at the moment, and then that might then mean we've got to depend on increasing council tax. But at the same time, if we're going through a recession and times are hard for the Dudley taxpayer, is asking them to cough up really a viable solution if they themselves are feeling the brunt? What other options can you possibly see, if any at all, or are we going to become incredibly dependent on central government helping us out?
Yeah, I think one of the problems that we've had for a number of years is we really have tried from a number of different angles as an authority to explore efficiency savings from transformation, efficiency savings from digital, additional income from commercialisation of services. And one of the things the external auditors have highlighted, as I have done for a number of years, that those measures promise much, and in practice, the story is they deliver little. So although it's not a pleasant or popular message that I'm giving here, I think having tried those routes over and over again under a number of different guises across different administrations, it may be time that we have to we do have to face the fact that there are three routes to balancing this, and that's more money from government. We'd all love that to be the whole of the answer, wouldn't we? More council tax or reduced spending. We don't want it to be the latter two. My honest assessment is I think it might have to be an element of both of those. And I totally get the point about not wanting to load more burden onto people with additional council tax, but those in the worst position will still be protected by council tax reductions under the scheme. And also, we are coming from a low council tax base, a low council tax rate, I should say, compared to other authorities. So we're in a better position to do that than perhaps some other authorities.
Okay. You're on mute. Joe, you're on mute.
Somebody muted me, that was why. My next question is to Terry. Is Terry able to give us a bit of an oversight of how other councils have performed? The reason why I ask is if other councils are in a similar position, if not worse, that might then put more of a pressure on government to help councils out.
Yeah, you won't be too surprised to hear that many other councils are in similar, if not worse, situations, and some of the chickens are coming home to roost earlier in perhaps even in this financial year. I think one of the things that so I think you're not going to be in this or in this alone. There'll be plenty of other councils petitioning central government for additional funding. One of the particular problems that I would probably highlight about Dudley, though, in comparison to maybe some of those other councils, is that because of the historic situation that Ian alluded to, of being a low council tax rate council, you haven't perhaps built up the level of reserves that some other councils have in place, whether that's the general fund reserved or some earmarked reserves, where maybe some other councils have more generous earmarked reserves there that they can perhaps call upon like this. And things have been a lot tighter historically in Dudley. So if the worst does happen, you haven't got that cushion to fall back on. So I think that's probably the situation that's worse here in terms of the impact it's having. The impact is either just as severe or if not more severe in some other councils around. And perhaps Ian might well be able to chip in with the latest in the position in perhaps some of the other Mets in the West Midlands.
Probably I wouldn't, because I'm a little bit too busy looking at Dudley. But yeah, it's that situation with reserves when things get difficult, when you've got low reserves, the money runs out faster. And although we're all in our different positions, I think all of our neighbours to some extent or another actually benefit from having higher reserves than we do, which is unfortunate. If I can pluck one positive out of this whole situation, central government has I think recognised the importance of local government as an asset in dealing with this this pandemic. Only today it's been announced that the payments to support people in self-isolation, central government will be looking to local government to administer that. That makes local government really important to central government, and I suppose this is not a political point in any way, regardless of the party. The last thing any central government wants is their local partner falling over, and that is the one positive I can pluck.
Okay, John. Tina, you want to come in?
Yes, it's just a point. The accounts you say have got an adverse qualified opinion, and we've talked a lot about the financial aspect of it. But did you say that it was qualified because of one highly significant point, which is the Children's Services audit? And if so, can somebody tell me whether we are putting in place these people so that we have permanent staff?
Right. Well, do you want me to jump in there first about what we are saying, and maybe one of the officers can then update you about what's happening as a result? The adverse value for money conclusion, I must stress this is the value for money conclusion, not the opinion on the accounts, which is proposed to be unqualified at this stage, is adverse. And the reason it is adverse is because of financial sustainability. That's the reason we've made that call this year. But perhaps maybe one of the officers might want to jump in and make the, fill you in what the latest position is and fill in the Children's Services post.
Yes, Kevin.
Yes, thank you, Chair. Members will be aware that we've been out to advert for 3 key posts. The Director of Housing Communities, that was appointed to about 3 weeks ago. Tomorrow we've got the appointments panel sitting for the Director of Public Health, and we're out to add as far as the Director of Children's Services is concerned. But in the meanwhile, those roles that sit immediately below the Director of Children's Services, in respect of the various heads of service, there's an ongoing recruitment campaign to fill those posts. We've got some very promising candidates internally, and that process will be the appropriate process that HR will organise. That's currently in train. Some of the posts have already been filled, and I think when Terry alludes to what he's put in his report, that's obviously a snapshot in time, and the posts are being filled in real time. So we'd expect the residual number of posts that are outstanding to be filled over the course of the next month or so. Thank you, Chair.
That's good news. Kevin. Right, you want to carry on, Terry?
No, I finished all that I'm. Sorry. I've switched the microphone on. Now that helps, doesn't it? I finished all that I wanted to really say. I don't know, Richard, if you want to come back in on anything.
Thanks, Terry. Sorry, I'm just trying to get my camera to work again. Just bear with me a second. I think you're going to have to do with that. Just on sound. I mean, no. I think we've summarised where we are, the reasons for the adverse value for money conclusion, the point was well made. Particularly, I mean, I draw members' attention to page 30 of the pack where we've got the action plan with our recommendations on the value for money issues, and on page 31 recommendations on accounts. And you'll see that we've had management responses to those. I mean, obviously, particularly in terms of the financial sustainability, it's an ongoing issue, and part of my role is to keep a weather eye on how things develop and consider my statutory requirements to report it if things take a more difficult turn. But at the moment, we just see where things go, and we need, like you, we need more clarity about future funding in order to make any judgments. So that was all I was going to say, Chair. Hand over back to you.
Right, at the end of the report, we do have the letter. Do you wish to, any comment on that, Ian?
No comment.
Letter of representation. Right, if there's no more questions, queries, comments. Right. We're asked then to consider the audit findings report for 1920, which we've done. Also to consider the draft letter of representation, which I've just mentioned. And now we want the committee's authorisation for me to sign and date the final version of the letter of representation in due course. Do we have that authorisation and we agree with the other two comments? Nothing adverse coming in, so I assume everyone is in agreement. Right, thank you very much. That ends the financial support on the audit. Right, thank you very much, William, Terry, Richard, for attending by computer and giving us that report. Thank you very much.
Thank you.
Right, we'll now move on to, yes, John. Okay, Terry. You're popping in and out, Terry, I just wondered.
No, that's fine. That's fine. Thank you.
Right, thank you, the three of you, for your reports. Right, item 6, the annual governance statement. Is that you coming in, Graham?
It is, Chair. Thank you. So the Accounts and Audit regulations require the Council to produce an annual governance statement, or AGS, which is signed by the Chief Executive and Leader of the Council and published as part of the Statement of Accounts. The annual governance statement is in the main an assessment of the effectiveness of the Council's governance framework as detailed within its local Code of Corporate Governance. I produced the draft AGS with the assistance from a number of managers. This was then discussed with Strategic Executive Board on the 28th of May and updated their comments and published with the draft Statement of Accounts in early June 2020. It has also been reviewed by external audit as part of their work on the Statement of Accounts, and their comments have been considered in the version attached at Appendix A. As the AGS covers the financial year 2019-20 and the subsequent period up to the sign-off of the 2019-20 Statement of Accounts, governance issues up to the date of this meeting need to be considered. For this reason, SEB reviewed the annual governance statement again on the 19th of August 2020, and further amendments were made, particularly in relation to the governance around the COVID-19 pandemic. The overall conclusion of the AGS, as shown in paragraph 8.1, was, with the exception of the issues identified in sections 5 and 6, the council's governance arrangements remain fit for purpose. The recommendation is to approve the annual governance statement and refer it to the leader of the council and chief executive for signature.
Right, thank you, Graham. Any comments anybody wishes to make? No hands are going up. I'd just like to make one comment that comes in 5.4, following on from the audit. There does seem to be quite a few acting and interim roles, both in this report and in the new senior management structure. So I'm glad to hear from Kevin that there's a lot of action going on to remedy this so that we do have permanent managers and senior people in the council. That was the only comment I got to make for this. So you gave us some good news anyway tonight, Kevin. Thank you for that.
You're very welcome, Chair.
Apart from that, I've no other comment and no other hands are going up. So we've just done the recommendation that we approve the annual governance statement as set out in Appendix A, and we're willing to refer this to the leader of the council and the chief executive for signature. No one is disapproving, so we assume that that is passed. So we move on swiftly to agenda item 7, which is probably the biggie for tonight, the statement of accounts. Are you taking it, Ian, or are you leaving it to Rachel?
Thank you, Chair. I'll take the item, but I'll leave all the hard questions to Rachel.
I thought you would.
Yeah.
Yeah. Delegation it's called, isn't it?
That's
Or
right.
passing
Yeah.
the buck in some cases.
Yes. Lisa, Jury, I think, has got some slides to share on screen just to help to summarise this as we usually do. Do you want just put that into slideshow mode so that people can see it? Okay, thanks, Lisa. Before I just go into this this short presentation to summarise the accounts, I just need to draw attention to one amendment, and it relates to what Richard Percival was talking about in relation to asset valuation. So there is an amendment to note 36 on page 104. There was some text circulated to members of the committee by Democratic Services on Friday, and it inserts an additional bullet point after the fourth bullet point in the note. The purpose is simply to show the valuer's understanding of the fact that there is this very material uncertainty about the valuation of land and buildings due to COVID-19. So that text was circulated on Friday. If you want to just move the slides on. The external auditors have already stolen my thunder a bit by thanking the team for the quality of the accounts and the quality of the working papers to support that. I mean, I would just like to add to that. These are over 100 pages of detailed financial accounts, and of course this year they did have to be produced against the background of being suddenly thrown into the hard lockdown situation. It's worth saying they were completed with minimal issues raised by the auditors, and actually completed within just 2 weeks of the original pre-COVID-19 deadline that we had. We were given a considerable extension by government, but we didn't use most of that, and it's a tribute to the team that they managed to do that. Many members of the committee will have seen these slides before, but I will just remind you about the fundamental basis of our accounting. What effectively happens is that our statement of accounts is produced to reflect two completely different ways of seeing our operation. There is, first of all, what I call the funding basis, and that describes how, as an authority, we raise taxes, we make charges, and we spend money on delivering services. And the way in which we account for that as an authority is ultimately governed by statutory regulations. But then we have to produce externally reported accounts in the detailed format that you've got in the separate document that's been sent out with the yellow book. That's about how we report externally. That is governed by a completely different set of rules, a code of practice which is produced under international financial reporting standards, and which is perhaps a bit more reflective of how private sector businesses are actually accounted for. Thankfully, the two different ways of seeing the world are reconciled in one statement, which is called the Movement in Reserves statement, which is what appears on page 22 of the accounts. So if Lisa, you move on to the next slide. So what appears there in one page, on page 22, I've just further simplified here as a single as a single slide. So I've combined a few numbers just to make it even easier to read than it is on that one page in the accounts. So the columns on this simplified table split our finances up into a number of different categories. The big one being the council's general fund, and that includes schools and all of the functions that the council performs, with the exception of our housing landlord functions. And most of the conversation we were having with the external auditors earlier was about that general fund, primarily about that general fund position. The next column is the HRA, the Housing Revenue Account, which is all about the rents we raise from tenants and our expenditure on managing and maintaining our council housing stock. The next column is a little bit of an accounting oddity. It's an accounting item called capital grants unapplied. It's relatively small sums in there, but it relates to the unused balances of what's called community infrastructure levy, which is a levy charged on developers and then used to fund capital expenditure. Relatively minor in the greater scheme of things. And then the final column before the total is what are called our unusable reserves. The first three columns all relate to money that can actually be used for something. Funding in that funding sense that I spoke about before, that can be used to deliver services. The unusable reserves are the reserves which are there just as a consequence of accounting issues like accounting for the value of fixed assets. They're there to make the balance sheet balance, but you can't actually use them for anything. That 257 million that we had on the 31st of March 2019, and that 266.1 million in there, unfortunately, because it's a very large sum of money, is not real world money that we can actually use to spend on services, but it does make the accounts balance. So that's column wise explanation of the chart. Going down the rows, the first row is fairly self-explanatory. It's the balance on the balance sheet at the end of the previous financial year, 31st of March 2019. The next column, next row, sorry, is the position as it would be if we calculated only using international financial reporting standards and didn't apply the statutory rules. So what that is saying is we would have a deficit on the general fund. We would have had a deficit on the general fund of 45 million if only working on that basis. We would have seen a small surplus on the housing revenue account, and we would have also seen our unusable reserves increase by a significant amount. What the next row does is to do all the accounting adjustments to get you from that accounting basis, according to the Code of Practice, the IFRS, to the local authority statutory way of calculating our position. So there's 29.6 million of favourable adjustments on the general fund that go quite a long way to remedying that 45 million apparent deficit, but not obviously the whole way. And that largely relates to the way in which capital assets are accounted for, valuations of assets, and pension fund accounting, which work in quite different ways for a local authority than they do for a private sector institution. Interestingly, this year, although there are some accounting adjustments on the HRA, they're so relatively small that when I simplify and round the numbers for this table, they round out to almost zero. So for 1 year and 1 year only, probably the HRA looks exactly the same, or to all intents and purposes, the same as it would look if we didn't have those statutory accounting rules. Small adjustment there to the capital grants applied, and then some adjustments that reverse how the unusable part of how the unusable reserves were changed. So we end up at the end of the year with 46.6 million. So still quite a significant reduction of around about 15 million plus on the general fund, and a small increase in the HRA and a small increase in that capital grants unapplied. And that is the whole of the 100-odd pages summarised into one page. And everything else in that statement accounts is successive levels of detail, explaining in ever more detail how we actually got to those numbers, and that's what the external auditors have been through and given an unqualified opinion on. Finally, just moving on to my last slide. Some of this ended up coming up in the conversation that we just had on the statement of accounts. But just to remind you, we have a low level of reserves as a local authority. March 2019, our unring-fenced reserves were 20% of spend. The average authority nationally, that was 44%. So we had less than half the level of reserve cover. By March 2020, that had gone down for us from 20% to 17%. At the moment, I can't tell you what the national figure is because those statistics are collated on a national basis once everybody has had their accounts audited, and obviously other people are not in that position. Though I suspect we would not see them coming down in line with us. There would still be an unfavourable difference between us and local authorities and other local authorities, and that's what the external auditors were talking about. That just reminds you of the low tax. Our band D is £1,381.60. The average metropolitan is £1,535.83. So that reinforces some of what I was saying in response to Councillor Roberts' question. And the consequence of that difference in council tax rate is we have 14.4 million less spending power than we would if we had the average metropolitan council tax. And because we have that low level of spending, that's what makes finding those further savings very difficult. The last point is the obvious one, and we've covered it, but I'll say it again. Every local authority in the country has been impacted by COVID-19. This is a difficult and serious issue for every single local authority. But what is perhaps not unique about Dudley, but places us in a difficult position, is we come into it with these underlying quite vulnerable conditions of low reserves, low tax, and low spend. Chair, that was all I wanted to say, and happy to take any questions or observations.
I think Kevin wants to make a comment to start with. Kevin, do you want to make your comment you've just chatted to me about? No. Fine. Jackie, you want to comment?
Yeah, thanks, Chair. I've actually got a question on page 17 of the narrative report, where it talks about the HRA and savings on discretionary housing payment. I just wondered whether Ian could give us an indication. He may have to do this later, perhaps, but I just wondered whether he could give us an indication on what the savings are, and whether, if it's in relation to DHP, those have to go back to, that money has to go back to the government.
Sorry, I think the answer is no. No, there is no money that I think needs to go back to government, because we used the whole of the discretionary housing payment. I don't know if anyone else wants to come in and help me with that one. Otherwise, I'll come back to you with a written answer. But I'm confident we used our external grant for discretionary housing payment for the year.
That's right. We haven't underspent the grant. It was just an underspend on our top up that we would normally make, if anything.
Okay, thank you.
Okay.
Sorry, Chair, from earlier. My hand was, I think it's termed a legacy hand. I hadn't taken it down since the last time it was put up, and in my efforts to pull down my hand, I managed to disconnect myself. But I'm back here.
Right, you're back with us now. Do you want
Indeed.
to make a comment about the?
No, Chair. My hand was up from the from my last comment, and as I said, as I was trying to take it down, I managed to disconnect myself instead.
You did want to thank the team.
Indeed, I've put that in the chat bar. They've worked under incredible stresses during the COVID crisis, but as you see today, fully on track. Both the finance and the audit teams have been able to produce their reports in a timely manner, notwithstanding the challenges. That deserves full credit, and certainly my thanks as Chief Executive.
Thank you. It's better vocal than just in written word, I think. Thank you, Kevin. I've got 1, 2 comments, questions, whatever. On page 40, my usual comment about assets of the council. We've got quite a few academies again in this year, where £9.5 million worth of assets have been lost by the council and gained by the owners of the academies. What would happen if these academies cease to exist? Would the owners of the academies keep all our assets, or would they have to transfer them back?
My understanding is that the buildings would transfer back to the local authority, who would then have to then pick up the responsibility for running education out of those facilities again. Of course, we would get government grant for that, because the dedicated schools grant would also flow back to the local authorities. The value of the assets would not be owned by private companies, wouldn't be lost to the public purse.
Right. Well, that's a bit of comfort to know that we haven't given them away entirely. Next one is on page 86. It's on the note 29, contingent liabilities. It's where care workers are going or likely to be paid by the hour rather than just an allowance. Will this have much impact on finance, or could it have much impact on our finances?
I don't know if anyone else wants to help with the detail on that one.
Do you know anything, Rachel? Or?
I don't have an idea on the quantum in terms of how much it might cost.
Well, I'm not after a finance, answering quantity of money, but generally, would it have much impact, do you think?
It could well do. I mean, a lot of our care providers are outsourced, so the cost would be an indirect cost rather than a huge sum on our actual payroll. It would be that care providers might have to incur greater costs as well. This goes back to, we've still got tiled house as an internal home, so there would be a mix of additional costs for our payroll and then our care providers.
Right. Well, I appreciate there will be some costs. It's just, and I know really that we won't know until it actually happens. But let's hope it's not too great a shock.
Yeah.
My next one is on note 38 on page 105, where you've got finance leases. The leases at March 2020, I assume those are new leases taken out in the year, as opposed to the same ones from last year with a different cost. Do you know anything about that, Rachel? Leasing. You're on mute. You're on mute.
Sorry.
Okay.
My other colleagues will probably put me right here, but this is the annual cost, and it will be new and existing leases. but I don't think we've had any new ones this year. So these would be finance leases that we've taken out a number of years ago, but this is how much we have paid out on an accounting basis this financial year.
Yeah, what I was getting at basically, this is the total rather than an addition.
Yes, it's the total.
Great, that's lovely. And on the 107, page 107, note 31, back to my old thing again, Ian. It's about or where is it? About Paragon with the financing of the schools. The academies have taken over Collie Lane. That's the one. So I'm trying to read this at the same time. Collie Lane School has been taken over by the academy. But does this mean that we are still paying the Paragon finance for this school, even though we no longer own the school and the academy are running it for us?
All of the costs are come out of the dedicated schools grant. So it's not coming out of the general fund and funded from council taxpayers. It's all from the dedicated schools grant, and the Summerhill and Collie Lane schools actually have additional funding given to them via the funding formula to account for the additional payments. So whilst everything goes through our books,
we're just basically handling the money rather than it coming out of our money.
Yes.
That's the main thing. I don't mind the government paying for our things.
No, that's right. There's the PFI grant as well, which comes in to help support the costs as well.
Lovely. Right, I think that's all I've got on it. Is we all right with everyone else? No other comments on the statement of accounts? Right, we then move on to the recommendations. But before doing so, I would personally and from the committee like to thank the financial team for the effort and the work they've put in during this year. They produced these accounts under difficult conditions, but done them exceptionally well and quickly. So can you pass on our thanks to the rest of the team, please, Ian? The recommendations are that we were asked to consider and comment on the statement of accounts, which we've done, and approve the statement of accounts. And the chair has to sign and date the accounts to give evidence of this approval. And also, the committee approves the delegation and approval of a revised statement of accounts to the Chair of Audit and Standards Committee in consultation with the Director of Finance and Legal in the event of audit work on the valuation of property assets and Birmingham Airport shares, which was detailed in paragraph 19, if this extends the date of the committee meeting. Are we all in agreement with those recommendations? If we get no hands up, I assume everyone is in agreement. Right, nothing has come forward. Right, thank you very much. That ends the statement of accounts. So we now move on to item 8, which is the Treasury Management. Please, Ian.
Thank you, Chair. During the audit findings report, I think I was struggling to pluck out a positive. I think I managed to pluck out one. I think the Treasury Management report is another positive in terms of our finances amid all the difficult challenges that we face. I'd highlight out of it paragraph 6, where we state that the primary factor in determining whether we undertake new long-term borrowing is cash flow need, and we seek to minimize the time between borrowing and anticipated cash flow need, subject to the need to maintain day-to-day liquidity. What that means is we don't run this treasury management function as a risk-taking merchant banking operation. We aim to borrow the money that the council needs to deliver its capital programme and to deal with its cash flow, and do not too much more than that. As a result of that, we in normal circumstances carry relatively low levels of investments. In paragraph 7, we averaged during last year 22.71 million. That was there to help us to manage cash flow. Of course, it varies on a day-to-day basis. So certain days in the month we receive significant amounts of income in, and then on other days of the month, typically, so payday, we see significant amounts go out. So our money fluctuates from day to day as a result of that. The best way to summarize overall what our performance on Treasury was for last year is actually to turn you to the table above paragraph 13. Because Dudley has that approach where we keep our investments low. We mainly just borrow when we need to, but not all authorities do that. A lot of authorities have gone out in the past and they have borrowed significantly in advance of need, and they are now carrying significant levels of investment proportionate to their overall financial position. Because we've done that, our net average borrowing rate, which basically is a calculation that combines the cost of our actual borrowings and the return we make on our investments into a net figure, which is what we would have paid out on our borrowings if we'd had no investments at all. Our rate is 3.71% compared with a 4.86% average. So that is one thing that is partly helping to compensate for our low tax, and one way in which we are able to be a low spender without it having an impact on services. So that's a positive thing overall. Moving on to the section about prudential indicators for 2019-20. These are measures that we have. They're set out in more detail in Appendix 2, but they're measures that we have just to keep a control on our Treasury activities. There was a small breach during 2019-20 on the proportion of our debt maturing between 24 months and 5 years. The reason we have that measure is we try not to have too much of our debt maturing in any one period, and we slightly breached our own limits for that period. With the benefit of hindsight, that is because that is being driven by the fact that in Dudley we don't only manage our own debt, we are still managing down the debt of the old West Midlands county. That is now relatively nearing its end. That will come to an end in 2026-27. And as we get closer to that end point, the West Midlands Fund is going to have more and more short maturing debts, because we don't want to have any loans on that fund which stretch out beyond the date when the West Midlands, all our neighbours will have paid in and paid off that fund. In order to avoid that being an issue for the current year and onwards, we've split that indicator between we split that indicator between West Midlands and Dudley Fund, so that isn't distorted, because we haven't got a problem on our own fund. It was just the West Midlands distorting the figure. The final main section of the report on page 80 from paragraph 17 onwards just talks about Treasury activity in the current year. Now, if you look in paragraph 18, our investments up to the middle of August have averaged around 63.9 million. Now, that is much more than we have seen as average investments for very many years. That has happened because of something that is actually beyond our control. So early in the year, we identified the need to go out and pre-arrange borrowings. I'm talking back as early as January, and we were pre-arranging borrowings to cover a big payment out to the pension fund in April. In January, nobody knew how hard COVID-19 was going to hit us and everybody else. COVID-19 did hit us. The funding support we have had from central government, including the funding support to do things like pay out business grants, for example, was largely paid to us upfront, some of it before the end of March, some of it very early on in April. So in cash flow, in pure cash flow terms, which is not ultimately the primary consideration in our financial position, we have suddenly become extremely awash with cash, and that's why those investments are running much higher. Those other local authorities that were already carrying high levels of investments will be carrying even higher levels of investments than us. So that will be very much a one-off distortion this year, but our relative to position to other local authorities will stay probably about the same. So that's a quick whistle-stop tour of our Treasury management. Happy to take questions.
Any questions? None coming up again.
Thank you.
Again, I'd like to make just a couple of comments. On paragraph 9 with the pensions, we did make 3 years payment, which the pensions fund sent out that all contributors could. This was paid with dividends, which gives savings in the next few years. Although we've borrowed money, we should still be better off having paid 3 years, I assume, Ian.
That is correct, and that's the reason why we did it.
And this actually, the pension fund went out to do this so that one of the reasons they could take advantage of this particular time of making investments while the rates of investment were very good, so that overall over the 3 year period we should make more money through being able to make these investments. So overall it should be good for the council with savings, and the pension fund should make more money out of it if everything goes back to normal in 2 or 3 years' time, and the rates for the pension fund are better. Time will tell with that. The other item, Ian, is right at the end about the Salford MDC. That has matured in June, I assume. It's matured.
That's correct, yes.
So unfortunately, we've lost our best interest maker that we've had for years. So,
Indeed. All good things come to an end.
I can't see us having another one as good as that come up again. Not at least in our lifetime. It was such a good thing. So, anybody want to make comments? No. So we are just asked to comment on any notes of Treasury and refer all the above to the Council for noting at the meeting on the 12th of October. We all agree with those recommendations. No one against, so I assume everyone is for it. We now come to item 9, which is to consider any questions from members to the chair where 2 days clear notice has been given to the monitoring officer, which is Council Procedure Rule 11.8. I don't know of any of these. Democratic Services, have you received anything?
No, none this time, Chair.
Right, thank you very much. Well, that concludes the meeting of the council, of the audit committee. I'm back in my old role then with the council. Before I close, I'd just like to thank our 3 auditors for attending, and also our chief executive for joining us for this meeting. I hope it's been somewhat enjoyable for you. And on that phase, we close the meeting if no one else has got any comment they wish to make. Right, thank you very much.
Thank you very much, Chair. Thank you, Alan. Cheers.
Yeah,
bye-bye.
Thank you. Right, thanks everyone. We'll now close the meeting and look forward to the next one.
Goodbye.
Thanks, Chair.